In the last issue a month ago, Nvidia's stock's price was $296. I said that I don't buy them, despite the correction and positive forecasts of many analysts. The stock was so overbought that the probability of continued correction was much higher than the probability of growth. Since then, the correction has continued and the price has fallen by another 20%. Maybe now it's time to buy. The chart shows that the relative strength index has fallen into the oversold zone, and this is a good sign in favor of buying. The last two times it was a great place to enter. Let's move on. Here we see that the price has not yet reached the 200-day moving average, so we can assume that now is not the best place to buy. But if the fundamental analysis turn out to be very positive, then it will not matter much. We will draw conclusions taking into account all factors. 92% or 23 out of 25 analysts recommend buying. I enter in table 9.2, the average expected price in a year. There are very positive expectations among T-Pranks investors. Bullish sentiment prevails among analysts and bloggers. The T-Prank score is 7 out of 10. The company's report is a little less than a month away, so the indicators of financial health and profitability have not changed here. But it is more interesting to see the indicators of the assessment of fundamental value, which directly depend on the current price. In general, the indicators of financial strength are quite average. They don't look particularly attractive, but they don't frighten either. The company has no serious financial problems. Petrovskiyev's score is 5. Altman's score is in the green zone, so the risk of bankruptcy is very low. The overall financial strength score is 6 out of 10. All the company's profit indicators are very high. According to net margin, the company is one of the leaders in its industry and is ahead of 95% of companies is in this indicator. The overall profitability rating is 9 out of 10. After this big correction, the price came closer to its fair values according to the GF value indicator, but still the price is still higher than the fair one. Even despite the 20% decrease, the evaluation indicators are still too high. For example, the forward price-to-earning ratio, the overall rating of the valuation is 1 out of 10. As I said earlier, over the past year, the debt burden has tripled compared to the previous year. Based on forecast from 41 analysts, the average profit growth in the next few years will be 16.6% per year. This is a good but still not very strong growth, so I will add a growth rating of 6 out of 10 to the table. We got an average score of 6.17. It looks rather pale, but let's look at the stock and technical indicators. As we can see, the best entry points were when the price dipped below this yellow line and dropped into the green zone. Now the price has come close to this line, but still has not crossed it. The second indicator shows the presence of both a small green and a large green dot. This often shows a successful entry point, but also this indicator should be considered in conjunction with others, as well as taking into account fundamentals indicators. In this case, it shows weak buy signals. Recent similar signals have been worked out like this. Stronger signals look a little bit different, but we will see it in other examples. We also see that major players have started to enter this correction, but they also show a fair average activity. This is also a small buy signal. For comparison, this is how strong buy signals look like. What conclusions can be drawn from all this? The company is planning a report in 26 days. Perhaps these purchases are related to the expectation of positive result of the report, but if the result this time do not exceed expectations, then there is a high probability that the price may fall even more. Most of the signals indicate a purchase, but all of these signals are of fairly average strength. Besides, the company is still too overbought. Now, for myself personally, I don't see purchases here, for the reason that there are enough more interesting options for buying. Thanks for watching. See you.